After days of historic declines, the Dow closed up nearly 1,100 points yesterday, the largest single-day point gain ever. So what do all of the ups and downs mean for your bottom line? CNBC's Brian Sullivan joins us with some answers. Brian, good morning to you.
I hope I have some answers, Chanel. Now I'm nervous. I wasn't nervous.
No more than we do. So I was looking at the numbers here. All three major U.S. indexes finished down 2% or more on Christmas Eve, and now they rose anywhere from 3 to 5%. So what changed from Monday to Wednesday for such a surge to happen?
Aside from the calendar, I mean, that's really what it comes down to. It's amazing, isn't it? It was the worst pre-Christmas trade for the stock market ever. So Christmas Eve, worst ever. Everything looks bad. We take Christmas off. We come back. We get this 1,100-point gain yesterday. Nothing really changed, and that's kind of the point. You thought it was the stock market, Chanel. Turns out it was actually Universal, a ride there, because it feels like that roller coaster. I think people point to a few things. It was kind of quiet politically. We didn't have any tweets. We didn't have any unexpected emails from the Treasury Secretary. And maybe the market rebounded. Today's not looking good as well, Craig, so it's anybody's guess.
So anytime you have a single-day jump like what we saw yesterday, you look back historically, the last time we saw a two-day swing like this, if I'm not mistaken, it was around 2008, 2009, the financial crisis. How nervous should we be with this kind of volatility?
See, we were feeling so good until you brought up the financial crisis.
Well,
right?
I mean, but it's a legitimate question.
It is true. Okay, so as the numbers get bigger, all right, the stock market has grown. We see the numbers go up. But to your point, you're exactly right. The two previous biggest point gains, and pros, of course, look at percentages, but the point gains were during the financial crisis because we had those wild swings. So a lot of the bears, those who are negative on the market, have come out of hibernation. What they're saying is, aha, this is symbolic of a slowing economy. And some people believe, the economy's doing well right now, that we could go into recession in late 2019, early 2020, and the market is reflecting that. We won't know. Only time will tell.
So I guess the takeaway then, millions of people obviously have 401ks invested in stocks, and these ups and downs, it's kind of scary. So what's your best advice at this point? Is it time? I already know what you're going to say. Is it time to pull your money out? Do we wait? Take a breath? Give us the advice that I know you're going to say.
Yeah, don't do that. Okay, don't do that. You're supposed to buy low, sell high. Don't sell high, buy low, or whatever it is, right? Don't sell in the bottom. Here's the thing. And I don't want to throw a bunch of math on you at 7-11 Eastern time, but if you put 10 grand into the equity market, stock markets 20 years ago, you have about 40,000 now. If you missed just 40 trading days in that 20-year period, the best 40 days, you'd have $0 now.
Wow.
You'd have no gain.
That works.
Wow.
So the point is, you want to be invested because you never know when those big days, like yesterday, are going to come.
Brian, I think you made it clear.
Hope so.
Brian Sullivan, always good to see you, buddy.
Thank you, Brian.
Thank you.